Hello again, traders. Doing trouble there from Drfx, swing trading mentoring. Gonna be taking a look at the Euro Pound and Pound Swiss franc currency pairs, which, based on the patterns that have been formed so far on their respective daily charts, look as if they're both in the process of completing range consolidation setups over the next several days. So if we see strong daily chart signals on these two currency pairs over the next several days, then it means that the movement is going to start to move towards the other side of the boundary. And in so doing, what we would then do is to go on the 4-hour chart to then look for trading opportunities and aim to capture trading gains of anywhere between 50 pips and 100 pips within a 2-day holding period. Now, what is done when I am analyzing the currency market on the daily chart is to determine whether or not the market is either in the process of forming a consolidation setup or has already completed a consolidation setup with clearly formed resistance and support boundaries. Now, the most popular thing to do when it comes to consolidation is to wait until these boundaries have been clearly formed and then trade between resistance and support. However, what I've discovered over the years is that if we can spot the early bearish and bullish waves that indicate that the market is going to be forming consolidation, we can trade those early waves for strong trading gains until the consolidation has been finally completed. So we no longer have to actually wait until the consolidation has been clearly formed. We can spot these early waves and trade them once the signals and patterns provided by the daily chart and the 4-hour chart are strong enough to justify trading them so that we can capture trading gains along the way until the consolidation has been finally completed. Now, once an opportunity has been identified where the currency pair is either forming a consolidation or has already formed a consolidation setup, is to look at the patterns provided by the daily chart and the 4-hour chart that would provide us with a trading opportunity as the market continues to wave in a sideways pattern. Once a trading opportunity has been identified, entry then takes place either on the daily chart or the 4-hour chart, but in most cases it will take place on the 4-hour chart, which will allow us to use a smaller stop loss. In terms of protecting our trade, the stop loss area on the 4-hour chart is used, and what we do is to identify strong areas such as trend lines, consolidation boundaries, as well as the highs and lows of candlestick formations and counter trend line setups that would have been formed along the way. Once a trading opportunity has been identified, the main goal is to capture a trading gain of between 50 pips and 70 pips within 24 hours using these signals and patterns provided by the daily chart and the 4-hour chart in the form of Japanese candlestick signals, trend lines, and consolidation setups. In cases where the market does provide us with larger movements, we would also target trading gains of up to a maximum of 100 pips, and to capture these larger price movements, we would then extend the holding period from 24 hours to 48 hours in order to ensure that we are able to capture these larger pip movements. Now, turning to the analysis of the pound Swiss franc, based on what we are seeing on the daily chart so far, it clearly is telling us that the market is in the process of completing a range consolidation setup on this time frame. You can clearly see here that the market has already completed 2 resistance points that has allowed us to complete the formation of this resistance boundary. However, at the other end, only one support point has been formed as of right now, this one here. And what is taking place now is that the market could be forming a second support point, which would complement this one formed here and would allow us to complete this and confirm this as being the support point, the support boundary of this range consolidation setup. So for this to be confirmed, what we would need now is for the market to provide us with a strong bullish signal that confirms this second support point, as well as continues the movement back inside of the consolidation that would take us up to the resistance point here, and in so doing complete the formation of this range consolidation setup. Likewise on the euro pound, which, as you may or may not know, is actually inversely correlated with the pound Swiss franc. You can see this clearly on all time frames, but especially on the larger time frames. So bullish movements on the pound Swiss franc are reflected as similar bearish movements on the euro pound. So given this situation, given this relationship, what we're seeing here is a very similar pattern on the daily chart, and the support boundary on this one has already been completed, and so what we're going to be doing now is to wait until the resistance boundary is formed and completed, and this will come with the completion of this U-turn here that would confirm this as the second resistance point that would allow us to complete the formation and confirm this as being the resistance boundary. So we're going to be needing the market to provide us with a strong bearish signal at this area here that would confirm the start of the continuation of this bearish U-turn that has already begun, and not only take us back towards the support boundary and complete the consolidation, but to also provide us with a trading opportunity to trade the market short. So on the euro pound, we're going to be looking out for bearish trading opportunities on the 4-hour chart, and on the pound Swiss franc, we're going to be looking out for bullish trading opportunities on the 4-hour chart that will allow us to take advantage of the completion of this consolidation setup. So what we're going to be looking out for in terms of a signal on the daily charts of these currency pairs are any of these types of candlestick formations. Now, these are the most common ones that you will see when the market is moving from one end of the consolidation to the other. Double bottoms, double tops, evening stars, morning stars, ABC signals, as well as bullish and bearish engulfing candlestick formations. So both in terms of the signal provided by the daily chart as well as signals provided by the 4-hour chart, these signals, these patterns generally represent the main types of signals that we're going to be looking out for to take advantage of these high probability movements. Tweezer bottoms and tweezer tops, not so much entry signals to trade when we see them, but they basically indicate that the market is ending a particular trend direction and that we're about to see a U-turn to start the movement in the opposite direction. So in summary, what we have seen here is that the daily charts of these currency pairs are in the process of completing the formation of consolidation setups. And what you have also noticed, or what you would have noticed, is that these two currency pairs are actually inversely correlated with each other, similar to what we see with the patterns on the Euro US dollar and the US Swiss franc. So what we're going to be needing from these two currency pairs are bullish and bearish candlestick signals on their respective daily charts. And once the signals are strong enough and clear enough, then we can enter the market and take advantage of these movements once that signal has been provided. Now, in terms of guidelines to pay attention to take advantage of these movements, very important that we accurately identify the support and resistance price points that we're trading towards. This ensures that we do not place our trading targets too far or too close or too near, so that we're able to maximize on the trading gains provided by these movements ahead of pullbacks. Of course, as part of these trading opportunities, as I mentioned before, very important to place our stop loss at strong areas on the 4-hour chart that will allow us to stay in the trade and protect our trade against temporary pullbacks until our trading targets have been hit. With these types of movements within this size consolidation on the daily chart, we are generally going to be talking about, we're generally going to need to hold the trades for anywhere between 24 hours to 48 hours, depending on the trading target that we're aiming to capture. So if we're capturing trading gains of between 50 and 70 pips, then the holding period is 24 hours. And if we're aiming for a trading target of more than that, with a maximum trading gain of 100 pips, then the holding period is going to be extended to 2 days. Of course, very important is that once you have entered the market, We do not monitor the trade. We do not look at the charts. We do not look at anything related to the floating profit or the currency price movement of the pair that we're in. This ensures that we do not fall into the bad habit and the temptation of closing our trades too early, simply because we see temporary movements taking place against our trading position. So to avoid that temptation, it is very important that we close the trading platform and then only check back when the trade has been closed at the end of the holding period. Or if you have a trading platform like mine, such as FX Pro, what we will do is to simply wait until the platform sends us an email alert informing us that the trade has been closed. So that is it in terms of the summary and what to expect for these currency pairs. If you have any questions, you can let me know. And of course, once I see a signal, then I'm going to be looking for a trading opportunity to take advantage of it by using the strong signals and setups provided by the 4-hour chart. So until next time, traders, happy trading.